Jim, let's talk about Whole Foods. It's a brand new position for us. We've actually never owned it in
No,
AAP.
I feel it went from $8 in the 2007, 2008 euro, the big decline, all the way up to the 70s. And I think that one of the things that's important to point out is that when they reported last time, they went from 6% comp store sales to guide down to 5.5. In retrospect, everybody after that, other than Chipotle, had worse numbers. So I think that this one, in the meantime, just keeps going lower, and I like that.
Well, right. As soon as it dropped below 50, both you and I were on the same page. We thought this really makes sense because it is a quality growth story, and it is part of the themes that you've talked about that we like in terms of that health, nutrition, wellness, all kind of rolled up into one. What do you think about the competitive concerns?
All right, that's what Jim Cramer on Twitter, immediately people blasted me. I was saying, listen, this is part of the Get Rich Carefully portfolio. I'm trying to build within action alerts because we should have been there a long time. Sprouts is very good, okay, but it's small format. I think that Chef's, the Fresh Market, these going down, Fairway going down. The competition is really Kroger, and Kroger's gotten very good, but Kroger can be beaten. Whole Foods is a major, remember, they're going to do 1,200 stores. They've got really still in the early innings of the rollout. And everywhere they go, I think they take share. You take a look at the Boston market when they bought the food maker, the giant food maker. I feel like that there was saturation, cannibalization, and you're going to find that maybe that's now abated. I like the stock. Is 48 where it goes to? You know what? It was so much higher. I'll take the risk that we buy more at 48.
It seems to me like it got lumped in with the high flyers, right?
Yes, it did.
And so if you can get these stocks to stabilize, and we've seen in the last couple of days, Facebook is green, ServiceNow is now green, Pandora.
Well, these were the Gartman names,
maybe,
right? I mean, not to pick on anyone, a very nice man, but there was a moment on Friday where things really, hell broke loose in these names, and it continued on Monday. And now we're just picking among the rubble. And Whole Foods, yes, it got a key upgrade, so we weren't able to nail the bottom. And the bottom, again, I mean, there's no reason why this stock can't trade at 49. I mean, if they guide down to 4, it will.
But when you look at the growth opportunities, I mean, 300 stores to 1,000.
1,200, he's going to put up more.
Probably more, right? I mean, in my model, I can get a heck of a lot higher earnings power if they can get to that 1,000. And then upside is really on the margin side. They've done some price initiatives. That kind of goes away.
It's not whole paycheck.
Right. So I think that, under 50, it seems like the risk reward is so much better.
Yeah, and people think they're everywhere, but Walter Robb has explained to me, the co-CEO,
they don't have them in my town.
Take a look. There's 2.5 million people in Brooklyn. There's one Whole Foods. The third and third. It's a fantastic store. But yes, I mean, I find that there's a craving for more Whole Foods, and people say, well, how about Trader Joe's? Very different produce, very different SKUs. So I know the stock is under heavy pressure. I know it's being liquidated by momentum guys. I know it's not going to spring right back up, but I do like it. It feels like Costco at 110.
Great. Thanks, Jim.
To get more of Jim's investing ideas, as well as a peek at other stocks he owns in his charitable trust portfolio, sign up for Action Alerts Plus. If you subscribe, you'll get a free signed copy of his new book, Get Rich Carefully, as a thank you. Sign up for Action Alerts Plus at actionalertsplus.com.